Nooresh Merani is here with us. Let's take the discussion forward. Nooresh, what are your charts telling you this afternoon? We've been seeing a kind of a trending day, Nifty, Bank Nifty, broader market. No attempt, even an intraday attempt of a rebound was seen. Do you see this as a sign of near-term weakness?
So the markets had a run one way, and at some point of time, you need to wait for price action to confirm that there is a clear-cut pause. And today's price action tells you there should be a pause in the index. We've broken the recent lows at 19,550 odd levels, and now the next level is 19,200, 250. And overall, the longer term, the last major breakout was 18,600, 18,800. The point is, even if we correct all the way from 20,000 to those levels, it would still not be a 10% correction. It will still be a 5-7% correction, which is a normal case even for a bull market. So the view right now is we've taken a pause on the index. We've taken finally one day, big day on the small cap and the mid cap indices. Over the last, say 10 days, even when the Nifty was correcting, the small cap indices continued to make a new high. So like I discussed in the morning, there was a little bit of a divergence, and this needs a price action confirmation. Today's price action is a confirmation that we are getting into a pause. Whether this goes into a much deeper correction, we'll see over the next 2 days of follow-up. So time to take some stop loss hits across the board in terms of stock-specific positions. And then again, wait out for fresh trades, take some short trades or sit on the sides and wait for the next trend reversal.
Look at some short positions or sit on the sidelines. That's the view coming in from Nooresh. But Kunal, what's your take? You had earlier mentioned that 19,500 is an important marker. There's a sharp spike in the wicks as well. What does it tell you? Is there further weakness or a sharp rebound now?
So Anisha, I've collated some very interesting charts to try and showcase that why 90,500 is important and why this level is important as a change of trend. So this is the start of this entire rally, sub 17,000 from March lows for the index. Now every trend has a behavior. So what we have spotted over the last 3-4 months of this price rally is that every time the index comes closer to this moving average, which is the 20-day moving average, we've seen that the correction has halted for the index and we've seen the trend resuming on the upside. So when does a trend change? When the behavior changes for the index. This time around, we've managed to break below that 20-day moving average for the index. Now, assumingly we close at 19,500 mark or below, then we could be confirming that this is the first sign of a change of trend for the index. So for positional traders, this is the first sign of confirmation that we've changed the trend on the index. But does that mean that the bottom gets formed immediately? We look at the next chart, which is India VIX. Again, a classical observation. Over the last 6-7 months of this calendar year, we've seen many a times that India VIX tried to come back towards its 50-day moving average, which is the blue line over here. But it failed to surpass those levels. And whenever that has happened for the India VIX, in the next couple of days, we've seen major panic or more selling pressure, which has come back. So when the India VIX spikes up, we've seen that the index actually forms a further corrective wave. This time around, we have not yet broken that level of 50-day moving average for India VIX, which means that maybe in the next 1 or 2 days, we could see a terminal sell-off for the index. And I think that's what the India VIX is suggesting. But the heartening part for the markets over here is that the indicators have already started to become oversold. So two major indicators which you look out for: put call ratio, both on the Nifty as well as on the Bank Nifty, we have hit 0.45 on the index, which is ideally a case that we have hit extreme oversold in terms of indicators on the sentiment perspective. And the RSI on the early charts is now sub 20. The last time when we were sub 20 was at sub 17,000 for the index, and we've seen what has happened for the index post that.
Very interesting data there. So the oversold position seems to be building up. At least that is what the indicator is telling you, that it's a bit of an oversold zone.